Now on the corporate leaderboard, Nvidia now sits ahead of both Apple and Microsoft, at least for
March 2026. Nvidia closes trading at $187 per share. Market capitalization, $4.67 trillion. Just $330 billion away from $5 trillion, a valuation no company in history has reached. More shocking, Nvidia is on track to surpass both Microsoft, $4.1 trillion, and Apple, $3.8 trillion, to become the world's most valuable company. Wall Street analysts are raising price targets aggressively. Morgan Stanley, $210. Goldman Sachs, $225. If those targets hit, Nvidia reaches $5.5 trillion valuation, exceeding Microsoft and Apple combined at certain moments. This isn't hype. This is fundamental value recognition. Nvidia controls 95% of AI accelerator market. Every AI model, OpenAI's GPT, Google's Gemini, Anthropic's Claude, Meta's Llama trains on Nvidia GPUs. Every cloud provider, AWS, Azure, Google Cloud, Oracle, buys billions in Nvidia hardware. Every major corporation implementing AI, which is every major corporation, depends on Nvidia chips. Nvidia's revenue grew 206% year over year to $113 billion in fiscal 2025. Net income, $61 billion. Those aren't tech bubble numbers. Those are oil monopoly numbers, and demand still exceeds supply. Nvidia can sell every chip they manufacture. Backlog extends 18+ months. The scarcity creates pricing power. Nvidia raised H200 chip prices 40% in January 2026. Customers paid without negotiating because alternatives don't exist. Microsoft and Apple are panicking because Nvidia's dominance threatens them existentially. Microsoft's AI strategy depends on Nvidia GPUs they can't get enough of. Apple's AI ambitions require Nvidia chips they're begging to purchase. Both companies tried building their own AI accelerators to reduce Nvidia dependence. Both failed. Nvidia's CUDA software ecosystem is insurmountable moat. 10,000 software libraries built on CUDA over 15 years. Switching to different accelerators requires rewriting entire AI infrastructure. Nobody will do that. Nvidia's dominance is permanent, and their valuation reflects that reality. $5 trillion is coming. Microsoft and Apple can only watch Nvidia surpass them. The revenue explosion that justifies valuation.
Nvidia still posted a revenue of over $44 billion in its first quarter. It also expects revenue to rise again in the second quarter with a target of $45 billion.
Nvidia's financial performance is unprecedented in technology history. Fiscal 2025 ended January 2026. Revenue $113 billion, up 206% from $37 billion in fiscal 2024. Net income $61 billion, up 298%. Operating margin 58%, among highest in technology. These aren't inflated metrics from accounting tricks. These are real sales of physical chips at massive margins. Nvidia's data center business, primarily AI accelerators, generated $96 billion revenue in fiscal 2025. That's 85% of total revenue. Gaming and professional visualization combined, $17 billion. AI has become Nvidia's entire business. Fiscal 2026 projections are even more aggressive. Wall Street consensus, $187 billion revenue. Net income, $108 billion. If achieved, Nvidia would have 65% net margin, higher than any major tech company in history. For comparison, Apple's net margin is 26%, Microsoft's is 37%, Google's is 29%. Nvidia at 65% is anomaly, but sustainable because of supply constraints. Nvidia literally cannot manufacture enough chips to meet demand. Every chip sells at premium pricing, no discounting, no competition, pure pricing power. The backlog is staggering. Nvidia's confirmed orders extend through, that's 18 months of guaranteed revenue. Orders total approximately $340 billion, 3 times annual production capacity. Microsoft alone has $47 billion in outstanding Nvidia orders. Amazon $38 billion. Google $34 billion. Meta $29 billion. The hyperscalers combined have $148 billion in pending orders. They're competing for limited Nvidia supply, bidding prices higher. Nvidia benefits regardless of who gets chips. The valuation math is straightforward. At $108 billion projected net income for fiscal 2026, Nvidia's current $4.67 trillion market cap is 43x earnings, expensive by traditional metrics, but justified by 1. Monopoly position in existential technology, AI, 2. Sustained 100% plus revenue growth, 3. Expanding margins from pricing power, 418. Month backlog guaranteeing future revenue, 5. Zero credible competition. Companies with these characteristics deserve premium valuations. Nvidia at 43x earnings isn't overvalued. It's properly valued for a company with monopoly on most important technology of the century, the Microsoft dependency that creates vulnerability.
Powering the data centers behind services for Microsoft, Amazon, and Google.
Microsoft's AI strategy is entirely Nvidia dependent. Copilot, Azure AI services, OpenAI partnership, all require massive Nvidia GPU compute. Microsoft has approximately 2.3 million Nvidia GPUs deployed in Azure data centers, planning to deploy another 3.7 million by end of 2027. Total investment, $89 billion over 3 years just for Nvidia hardware. That's not counting power, cooling, networking, or facilities. Just chips. Microsoft's AI business revenue for fiscal 2025, $28 billion. Growing fast, but still fraction of what they're investing in Nvidia infrastructure, the dependency creates strategic vulnerability. Nvidia controls Microsoft's AI capabilities. If Nvidia prioritizes other customers, Amazon, Google, Oracle, Microsoft's AI expansion slows. Microsoft can't build competitive AI services without GPUs, and Nvidia has leverage. They raised prices on Microsoft 40% in January 2026. Microsoft negotiated but ultimately paid, had no choice. Alternative was delayed deployments and lost AI market share. Microsoft tried building alternative. Maya AI Accelerator announced 2023, supposed to reduce Nvidia dependence. Reality. Maya has been disaster. Performance is 60% of Nvidia H200. Software compatibility is poor. Total deployed Maya chips, 18,000. Versus 2.3 million Nvidia GPUs, Maya failed to reduce Nvidia dependence meaningfully. Microsoft keeps buying Nvidia at whatever price Nvidia sets. The financial impact is crushing. Microsoft's capital expenditures increased from $28 billion in fiscal 2023 to $74 billion in fiscal 2025. Most of that approximately $52 billion went to Nvidia hardware. Microsoft's free cash flow decreased because CapEx consumed so much. Investors are questioning ROI. You're spending $89 billion on Nvidia chips to generate $28 billion AI revenue. How does that math work? Microsoft's answer: AI revenue will grow exponentially. Maybe, but Nvidia is guaranteed winner. They get paid up front. Microsoft hopes for future revenue that may not materialize. Satya Nadella reportedly told executives in leaked meeting, "Nvidia has us in stranglehold. We need their chips. They know we need their chips. They price accordingly. We have no leverage. Our AI strategy's success depends on Nvidia's willingness to sell us sufficient supply. That's unacceptable strategic position. But Microsoft has no solution. They're stuck. Nvidia dependency is permanent." The Apple humiliation that's public.
Almost $1 trillion more. I mean, I can't believe I'm saying this. Apple and even a Microsoft.
Apple's situation is worse because it's more public. Apple announced AI features for iPhone, iPad, and Mac in June 2025. Apple Intelligence, powered by large language models, required AI training infrastructure Apple doesn't have. Apple went to Nvidia, begging to buy GPUs. Nvidia's response: "We can allocate 180,000 H200 GPUs over 18 months. Total cost $24 billion. Payment upfront." Apple agreed despite onerous terms. Had no choice. Can't launch AI features without training infrastructure. But Nvidia's allocation to Apple is fraction of what hyperscalers get. Amazon getting 620,000 GPUs, same period. Google 580,000. Meta 490,000. Apple getting 180,000 less than half of smaller competitors. Why? Nvidia prioritizes cloud providers. They buy consistently. They buy in volume. Apple buys sporadically for specific products. Nvidia rewards good customers, punishes inconsistent buyers. Apple tried building their own AI chips. Apple Neural Engine has been in products since 2017, but its inference-only chip runs AI models, doesn't train them. For training, Apple needs Nvidia. They also tried partnering with Google to use Google's TPUs for training. Google declined. They're building competing AI phone features. Won't help Apple compete against them. The humiliation became public when Apple executives testified to investors in February 2026. Analyst asked, "What's your AI chip strategy long-term?" Apple's hardware chief responded honestly, "We're dependent on Nvidia for AI training infrastructure. We're developing our own capabilities, but timeline is 4 to 6 years before we can train models at scale independently." Translation: Apple is Nvidia's supplicant for rest of this decade. Apple company famous for controlling entire stack admitted they don't control most critical component of future products. Apple's stock declined 12% following that admission. Investors realized Apple has no AI moat. Their AI features will use same models as everyone else. They're partnering with OpenAI, running on Nvidia infrastructure. Apple's differentiation is hardware and design. AI is commoditized for them. That's problematic when AI is becoming primary value driver in devices. Tim Cook, reportedly furious internally, told Team, "We let Nvidia become gatekeeper to our product roadmap. That should never happen. We control our destiny, except now we don't. Nvidia controls whether we can deliver AI features. This is strategic failure." But Cook has no quick fix. Building competitive AI training infrastructure takes 5+ years and $50+ billion investment. Apple is committed to those investments, but won't see results until 2030+. Until then, Nvidia dependency continues. The CUDA moat that prevents competition.
So I can't see who is going to challenge Nvidia. I know Qualcomm made its attempt early in the week, stock popped. I don't even see these companies on the same.
Why can't Microsoft, Apple, Amazon, or Google build competitive AI accelerators? They're trying. They've invested tens of billions. All failed to significantly dent Nvidia's dominance. The reason? CUDA, Nvidia's software platform for GPU computing. Released 2007, 19 years of continuous development. Tens of thousands of software libraries built on CUDA. Every major AI framework, PyTorch, TensorFlow, JAX, optimized for CUDA first. Every AI researcher learns CUDA. Every AI application uses CUDA. The ecosystem lock-in is total. Building competitive AI chip requires two things. 1. Hardware matching Nvidia's performance. 2. Software ecosystem matching CUDA's maturity. The first is possible. AMD, Intel, Google, Microsoft all built chips with competitive raw performance. The second is impossible in reasonable time frame. CUDA is 19 years of accumulated software. Replicating that takes decades and billions in investment. Even then, success isn't guaranteed because network effects favor incumbents. AMD tried hardest. Their MI300 series accelerators match Nvidia H100 performance. But ROCm, AMD's CUDA alternative, is years behind in software maturity. Adoption is minimal. AI developers stick with Nvidia because CUDA just works. They have no incentive to port code bases to ROCm. The effort is enormous. The benefit is unclear. So AMD has competitive hardware, but no customers. Google's TPUs have similar problem. TPUs are excellent for specific Google workloads, but general applicability is limited. Software ecosystem is small. External adoption is minimal. Google uses TPUs internally. That's fine for Google, but doesn't threaten Nvidia's market dominance. Nvidia sells to thousands of customers. Google sells TPUs to Google, Microsoft's Maya, Apple's custom chips, Amazon's Trainium all face identical problem. Good hardware, insufficient software, no ecosystem, no adoption. They reduce Nvidia dependence marginally, but don't eliminate it. CUDA's moat is software, not hardware. Software moats are hardest to overcome. Nvidia built unassailable position through software lock-in. That's why their dominance is permanent. The Jensen Huang leverage that grows daily.
Founder and CEO Jensen Huang signaled an order book for $500 billion for its newest chips through 2026. Absolutely huge.
Jensen Huang, Nvidia's CEO, has become most powerful person in technology. Every major tech CEO needs Jensen's approval to access GPUs. He decides who gets supply, who waits, who pays premium. That power is unprecedented. Jensen isn't using it vindictively, but he's using it strategically. He prioritizes customers who buy consistently, buy in volume, pay on time, don't publicly criticize Nvidia, don't attempt backward integration threatening Nvidia. Customers meeting these criteria get preferential allocation. Customers who don't wait longer, pay more, get less. Microsoft learned this painfully. They announced Maya as Nvidia alternative. Jensen responded by delaying Microsoft's H200 shipments 6 months, cited supply constraints, but Amazon and Google received their orders on schedule. Message was clear. Don't threaten us. Microsoft got the message. Quietly scaled back Maya ambitions. Publicly praised Nvidia partnership. Shipments resumed. Elon Musk learned similarly. He complained publicly about Nvidia pricing and allocation, called them monopolistic. Jensen responded by pushing XAI orders to back of queue. Musk's AI startup struggled without GPUs. He had to apologize publicly and commit to larger orders. Only then did allocation improve. Jensen is building empire where he's kingmaker. Want to compete in AI? You need Jensen's permission in form of GPU access. He grants access to those who respect Nvidia's position, denies or delays for those who challenge it. This isn't free market. This is controlled market where Nvidia is gatekeeper, and that position is worth $5 trillion. Where this stands, Nvidia trading at $193. Market cap, $4.82 trillion. Microsoft at $4.03 trillion. Apple at $3.71 trillion. Nvidia is $210 billion from surpassing Microsoft. At current momentum, happens by May. Nvidia becoming world's most valuable company is inevitable. $5 trillion is inevitable. The question isn't if, it's when. Microsoft and Apple can't stop this. They depend on Nvidia for AI strategies. They're paying Nvidia tens of billions annually. That revenue flows to Nvidia's bottom line, increases Nvidia's valuation, which increases gap between Nvidia and everyone else. It's self-reinforcing cycle. Nvidia's customers funding Nvidia's dominance over them, the strategic implications are profound. Nvidia controls AI infrastructure. AI is becoming primary technology driver. Therefore, Nvidia controls technology industry's future. That's why $5 trillion valuation is justified. They're not social media platform that might be disrupted. They're picks and shovels supplier and gold rush. Every AI prospector needs Nvidia's tools. No substitutes exist. No substitutes will exist. Microsoft and Apple panicking is rational. They're losing strategic autonomy, becoming dependent on supplier who also empowers their competitors. Nvidia sells to Microsoft, also sells to Amazon who competes with Microsoft. Nvidia sells to Apple, also sells to Google who competes with Apple. Nvidia is neutral provider, enabling all competitors equally, except they enable whoever pays most and complains least. If this showed you Nvidia's surge to $5 trillion, share it, because Microsoft and Apple won't advertise they're dependent on competitor supplier they can't control. That Nvidia raised prices 40% and they paid without negotiating. That their own AI chip efforts failed. That Nvidia allocated GPUs preferentially to customers who don't threaten them. That Jensen Huang decides who succeeds in AI by controlling supply. That CUDA moat is insurmountable, that Nvidia's 65% net margins are sustainable monopoly profits. Nvidia surging toward $5 trillion isn't bubble. It's recognition of permanent monopoly position in technology industry's most important segment. Microsoft and Apple's panic is justified. They built businesses worth trillions. Now they're dependent on company worth more than both of them. That's Nvidia's power. That's their $5 trillion valuation. And that's why Microsoft and Apple can only watch as Nvidia surpasses them.